Hello class, this is a video lecture of chapter 4 of the business math text, and it is titled Banking. Now there's going to be a lot of things in this particular chapter that you may already know, so it's going to seem like a little redundant, but um, I'm going to try to get through the PowerPoint presentation as quickly as I can, and that way the video won't be so long for upload, and you can also go back if there's any questions that you may have. So there's two learning objectives for section 4-1, make account transactions and record account transactions. Making account transactions. Various checking account forms or records provide written documentation of the funds that flow into and out of the account. A transaction is a banking activity that changes the amount of money in a bank account. Funds going into the account are deposits and recorded as a credit to the account. A deposit ticket is needed to support the transaction, or a deposit slip. Nowadays, you can just deposit the money directly into the ATM. So making an account deposit, the first step is to record the date. Step 2, enter the amount of the currency and or coins being deposited, and step 3, list the amounts of each check to be deposited, including an identifying name or company. Step 4, add the currency, coins, and checks. Step 5, if the deposit for a personal account, if it's a deposit for a personal account and you need some money in cash, enter that amount on the line, less cash received, and sign on the appropriate line. Then subtract the amount of cash received from the total of the net deposit. The bank will issue a bank memo. An increase in the balance in your favor is called a credit memo. A decrease in the balance is called a debit memo. And essentially, you can just translate this to a receipt for the transaction. So here's an example. Suppose Janice's bank initially cleared a check for $174, which Janice actually wrote for $147. Would she receive a credit memo or a debt memo once the bank detected its error? And the answer is a credit memo, because the amount of the check that was cleared is for $174, and Janice actually wrote the check for $147. Businesses that permit customers to use credit cards to charge merchandise ordinarily receive payment through electronic deposit from the credit card or check processing company. Sometimes it's called a point of sale transaction, or POS for short. Visa, MasterCard, and Discover are examples of major credit card companies that electronically transmit funds to business accounts, or EFTs, and I'm sure you've seen that before. Another type of electronic deposit is a direct deposit for payroll. Employees can access their paycheck funds directly from their accounts. A withdrawal is a transaction which reduces the amount of funds in the account. These transactions are called debits, not debts. I hear people say that debts, but it's actually a debit. Okay. One bank record for withdrawals is called a check or a bank draft. Another type of debit is through the use of a debit card to pay for goods and services. Withdrawing funds from an ATM will also result in a debit to the account. The payee is the one whom the money on a check is paid. The payor is the bank or institution that pays the amount of the check to the payee. The maker is the one authorizing the payment of the check, and automatic drafts are regular withdrawals that the owner of an account authorizes to be made electronically. Signature card is the signature of those authorized to sign the checks for a given amount. A PIN number, or PIN, is a private code that's used to authorize the transaction on a debit card or ATM card. So PIN stands for personal identification number, and I kind of laugh when people say PIN number, because that's like saying personal identification number. So it's PIN, P-I-N, personal identification number. So then these are the components of a check. You have the payee, the person who is getting paid here on this line, paid to the order of. The date the check was written on this line, this is the number of the check. The code number to identify the bank. The amount of the check in numerals right here, so you put 243 and then 50 over 100 or just 0.50. Usually, and I've had a chance to work at a bank before, what the what the representative in the bank is going to look for is the written amount first. So that's normally the one that they're going to go for, and then they're going to see if there's a mismatch between these two. The signature of the maker goes in the bottom right side. Here you have identifiers. You have the identification code of the bank here. You have the maker's account number, magnetic check number right here. Sometimes this is considered the routing number also. The purpose of the check can go right here, although you don't have to put one, but it can help you just to keep track. The bank is usually here right above the memo, and the amount of the check in words written out on that line. Make a withdrawal with a check. The first step is to enter the date of the check. Step 2 is enter the name of the payee. Then enter the amount of the check in numerals. Step 4, write the amount of the check in words. Cents can be written as a fraction of a dollar or a decimal notation. Step 5, explain the purpose of the check. Step 6, sign the check. So here's some more key terms. A check stub is a form attached to the check for recording account transactions that show the account balance. The account register is a separate form for recording all checking account transactions. It also shows the account balance. Individuals and businesses with banking accounts must record all transactions made to the account. Make an entry for every account transaction. For checks and other debits, enter the date, amount of the check and debit, the person or company receiving the check or debit, and the purpose of the check and debit. Subtract the amount of the check or debit from the previous balance to obtain the new balance. For handwritten checks with stubs, carry the new balance forward to the next stub. For deposits and other credits, enter the date, the amount of the deposit or credit, and a brief explanation of the deposit or credit. Add the amount of the deposit or credit to the previous balance to obtain the new balance. On an electronic money management system, enter the appropriate details for producing a check. Record other debits and all deposits and credits. The account register is maintained by the system automatically. For business accounts or personal accounts used for tracking expenses, record the type of expense or budget account number. Endorsements. Banks will require payees who are not account holders to present identification before cashing a check from their bank. Account holders will be required to sign the check and also record their account number on the back of the check, although not always. Some banks may do this. Endorsement is a signature, stamp, or electronic imprint on the back of a check that authorizes payment in cash or directs payment to a third party or account. Simple endorsement, the payee signs or stamps the back of the check to deposit the amount into an account or to cash the check. Restricted endorsement, a type of endorsement that reassigns the check to a different payee or directs the check to be deposited in a specified account. Restricted endorsements. In a restricted endorsement, the original payee writes, "Pay to the order of," lists the name of the new payee, and signs the check. Another type uses the phrase "for deposit only" and listing the account number without actually signing or endorsing the check. These measures are intended to provide greater security when handling checks. Learning outcomes for 4-2. Reconcile a bank statement with an account register. Financial institutions provide account statements for their checking account customers. To enable them to reconcile any differences between that statement and the customer's own account. So that's what these are for. Any transactions that had not been posted at that time are considered outstanding and are taken into account during this process. So back in the day, people used to write all their transactions and all their debits and credits on like a ledger that would come with your checkbook. Nobody uses that anymore. I know that it comes with the checks that are sent to me, and I don't use them, and I don't think you do either. So right now everything is handled electronically through the internet. We don't worry about it. We don't write things down like we used to back in the day. but it's a service that the bank provides. Bank reconciliation, another key term, is the process of making the account register agree with the bank statement. The bank statement is an account record provided by the bank periodically designed to match your records to the bank's records. And a service charge is a fee the banks charge for maintaining the checking account or for other banking services. Sometimes they'll waive the fee if you have direct deposit. I know Bank of America does this. And I know Wells Fargo, for instance, in some checking accounts, or any bank for that matter, will require you to have a minimum daily balance in order to avoid paying the fee. And I think maybe for Wells Fargo, off the top of my head, I know 1,500 for one of their checking accounts is what they require as a minimum if you don't have direct deposit with that account. Another key term is a return check, a deposited check that was returned because the maker's account did not have sufficient funds. Although that's not the only reason why a check could be returned. It could also be returned if the person issuing the check produces a stop pay. That's another reason, and there can be a majority of reasons. But a lot of times when you hear that a check bounces, it's because there were insufficient funds in the account. A return check fee is a bank charge to the depositor for the return check. Non-sufficient fund fee, or NSF. A fee charged to the account holder when a check is written for which there are not sufficient funds. Note, when a check is returned NSF, there are sometimes two penalties, one the bank charges and another by the payee who was unable to collect the money. Outstanding checks are checks that have been written but have not yet been posted to the maker's account. Outstanding deposits are deposits that have been made but have not yet posted to the maker's account. And as a side note, when reconciling your account, be sure to note any bank fees for return checks, service charges, etc. on your account register. How to reconcile a bank statement. The first step is to check off all matching transactions appearing on both the bank statement and the account register. The second step is to enter into the register the transactions appearing on the bank statement but not checked off. Check off these transactions as they are entered and update the register balance accordingly. This is the adjusted register balance. The third step is to make a list of checks and debits in the register that have not been checked off. Add these amounts to find the total outstanding debits, and you can use figure 4-25 as a guide. The fourth step is to make a list of all deposits and credits in the register that have not been checked off. Add these amounts to find the total outstanding credits. The fifth step is to calculate the adjusted statement balance by adding the statement balance and total outstanding deposits and credits and then subtracting total outstanding checks and other debits. So you have your statement balance, your total outstanding credits, your total outstanding debits, and then that's your adjusted statement balance. The sixth step is to, compare the adjusted statement balance with the adjusted register balance. The amounts should be equal. And then, I don't know what happened to step 7. You have the publisher to blame for that. But step 8 down here is to write a statement reconciled on the next bank line in the account register and record the statement date. And here we go back to step 7. If the registered statement balance does not equal the register balance, find the cause of the difference and correct the register or notify the bank accordingly. We went over step 8 again in the previous slide. Write statement reconciled on the next blank line in the account register and record the statement date. And this concludes our PowerPoint presentation for Chapter 4. As I said earlier, this may seem a little redundant to a lot of you, but this is just kind of like banking, like consumer banking 101, if you will, just so that you're equipped with some basic terminologies in case some of you didn't know. A lot of this stuff is automated, so like the reconciliation process, you can just go online and see your account activity. It's a good practice to go in a couple times a week. I know I go in every day and check my balance. A lot of times Some banking institutions like Wells Fargo, Bank of America, TD Bank, they will they will take your transactions and they will categorize them so that month to month you can see how much money you're spending on certain things. So, like for example, I know for me personally, one of the discretionary expenses that I make is eating out at restaurants, and then you don't really realize it when you're out on a Friday night or Saturday night and you're just spending money, but it's good to see how much you're putting into that particular category so you can make better saving decisions. This concludes chapter 4 of the business mathematics text. And as always, if you have any questions, comments, concerns, please feel free to email me at any time. Thanks and have a great day.